Monthly payments from this year's child tax credit are going to be hitting millions of bank accounts this month. But there are still some key aspects of this enhanced credit that parents need to know about. The child tax credit got a major facelift for 2021, thanks to legislation from the American Rescue Plan. The temporary enhancement upped the maximum amount parents can qualify for from $2,000 to $3,600 for children under 6 and $3,000 for all other children under 18. It also made it so half of the credit will be applied in advance via 6 monthly payments. Millions of parents will be receiving their first of those payments, worth up to $300 per child. With so many changes in such a short period of time, it's reasonable if you find yourself confused by the nitty-gritty portions of the revamped credit. That's why we've reached out to experts in tax policy and financial planning to help you navigate what they say are the most important pieces of knowledge to have about the 2021 child tax credit. 1. You don't need any income to qualify. Because the American Rescue Plan removed the minimum earnings floor as a requirement for receiving the child tax credit, families with extremely low or no income are eligible for monthly payments. In prior years, you had to have income to qualify for the credit, and the amount of the credit was phased in as you earned more income, says Erica York, an economist from Tax Foundation's Center for Federal Tax Policy. So it was not only a benefit related to having children, but also a benefit that incentivized additional work, she says. This year's credit does not phase in, so even if you don't make enough money to technically be required to file a tax return, you will still receive the full credit for each child in your home. 2. Some parents may want to opt out. Heads up, freelancers and independent contractors, you may not want the monthly payments. The payments are basically in advance on your future tax refund. So if you typically owe taxes every year, then you're only getting money you'll ultimately have to pay back. Instead, you can opt out of the monthly payments and get the full amount of the credit your family qualifies for when you file your 2021 taxes, which will help lower your overall tax bill. You can use the IRS's Child Tax Credit Update Portal, CTC Up, to unenroll from the monthly payments. 3. The enhanced credit could have a major impact on your tax refund next year. While it might be tempting to just take the monthly payments and postpone thinking through the math until next spring when you file taxes, experts say that'd be a mistake. Particularly if you have multiple children and there's thousands of dollars on the line. For many parents, opting out of the monthly payments and applying your entire credit as a lump sum come tax season could increase your refund after filing next year. But it may also be the case that you end up with a larger tax refund even if you don't opt out of advanced payments, depending on factors like your income and when you last updated your tax withholding with your employer. 4. You can't update your family or income information until September. Parents whose income or number of children has changed since they last filed taxes should update their information with the IRS to ensure they're getting accurate monthly payments. Unfortunately, the tool for parents who need to report those changes isn't scheduled to open up until late September. That can be frustrating if you've seen a significant change, since major changes to your taxable income, marital status, or number of children could potentially leave you owing a portion or all of the money from the monthly payments back to the IRS come tax season. 5. You won't get monthly payments for new children until after they're born or in your custody. Because you won't be able to change how many children currently live with you in the CTC Up portal until late September, your first few monthly payments will only be for the number of children reported on your last tax return. If you have a child who was born before the portal is live, any missing payments will be sent out via your tax refund. According to Barlow, children born any time up until 11:59 p.m. on December 31st will qualify for the entire 2021 child tax credit, but the monthly payments would only be on a go-forward basis. 6. There are no rules about what you spend the money on. Experts want people to understand that the child tax credit payments don't come with any use it or lose it conditions the way some family welfare programs like SNAP food benefits, sometimes known as food stamps, are designed. Nor are parents required to spend the money on child-specific products or services. Instead, Daniel Milan, a managing partner at Cornerstone Financial Services, says parents should first and foremost figure out where the most pressing gaps in their budget are and make spending decisions from there.